This podcast is for informational purposes only and is not provided as financial, legal, or any other advice. The information is not investment advice or an offer to buy or sell any securities or make any investment. The views expressed by guest speakers are their own, and any reference to third-party products, services, or information does not constitute an endorsement thereof by SNN or its affiliates. SNN expressly disclaims all liability for any individual's use of the information presented in this podcast.
My guests on the show today are the team from Ascent Industries. It's a publicly traded company. This symbol is ACNT on NASDAQ. From the team, we have Bryan Kitchen, as well as Ryan Kavalauskas. Bryan, the president and CEO, as well as Ryan, the CFO. Ascent Industries is a company that engages in a number of diverse business activities, including the production of specialty chemicals and industrial tubular products. Ascent will be joining us in Las Vegas, and I invited the team on to learn more about the history of Ascent Industries, Bryan and Ryan's background and why they decided to join Ascent, and their experience turning around specialty chemicals businesses, the path to profitability while still focused on growth, and the 3 to 5 year vision for the company. With that, please enjoy my conversation with Bryan Kitchen, President and CEO, and Ryan Kavalauskas, CFO, the team from Ascent Industries.
Bryan, Ryan, thank you for joining me today. How are you doing?
Doing great. Thanks for having us.
Thanks for having us.
Absolutely. It's great to have you guys on here. And we're excited to also have you guys present at our upcoming conference in Las Vegas. So that should be good fun to see you guys in person. But, before we, get to Vegas and everything like that, I thought I'd invite you on so that we can do a little deeper dive on Ascent and go from there. Because this is kind of my first time doing an interview with you and wanting to understand a bit more about the industry and the company. So first question I ask everybody on here is, can you give us that one sentence that best describes Ascent Industries? So I guess, Bryan, I'll come to you on that.
Yeah, no problem. So, Ascent Industries is a 75-year-old industrial manufacturing company, and we have two different divisions, one being specialty chemicals and one being stainless steel tubular assets.
Very cool. All right. Well, so without going through the entire 75-year history, maybe some of the key points, but, I'm just curious, looking back at the company's history, it was 75 years old. What, to your knowledge, what was the original thesis for its founding? Has it changed? And if so, what does Ascent look like, or how is it different when you look at it today versus when it was first originally founded?
Yeah, you bet. So Ascent was founded as a specialty chemical company. Nominally 65 years ago, give or take, there was a conscious decision taken by the board at the time to diversify the company. And that's when they decided to bolt on stainless steel tubular assets. Over time, the business has changed, but where we are today, we are incredibly hyper-focused on building out a specialty chemicals platform. So we're effectively going back to our roots.
Very good. So, when you think about the mission and the thesis for the company now here in 2025, what would you say that is? What is the goal? What gets you guys up in the morning and say, all right, this is what we're trying to do today. This is who we're serving.
Yeah, look, what really gets Ryan and I juiced is making good businesses great, right? So that kind of started off at our last extravaganza that we had together. We turned around a failing specialty chemical company, had a successful exit, were presented with an opportunity to join Ascent and basically rinse and repeat. We're super excited about Ascent. We had a really good first year on fixing the foundation, and we're excited about what 2025 holds.
Very cool. All right. So for those, let's dig into the business itself. Specialty chemicals, it can run the gamut. As you guys probably know, it's a big industry, a lot of different ways to skin this cat. So where can you describe the segments for Ascent, and then what makes your products and services unique and different compared to maybe some other specialty chemicals companies out there?
Yeah, you bet. So I guess first and foremost, we're basically split right down the middle. So 50% of our top line is structured around specialty chemicals. 50% is structured around the stainless steel tubular business. When you look at our specialty chemicals capabilities, they're actually very, very unique. Over time, we have stitched together three different assets with a diverse set of capabilities. We participate in a wide array of markets, from paints and coatings and personal care to HI&I to oil and gas to pulp and paper. But we basically participate in a whole wide array of markets with multifunctional assets. And what we've been working on over the past year is really being purposeful about where we spend our time. And we've been allocating a lot of our time to kind of fixing that core foundation. And you've seen that through our 2024 results as we've improved pretty significantly, both GP and adjusted EBITDA in both businesses.
Absolutely. So, I mean, when you're going to the wide array of markets and serving all these different customers, why do certain customers in certain markets pick Ascent over some of your competition?
Yeah, you bet. I mean, purposeful agility. So I'll give you a real life example. We have the ability to innovate effectively at the speed of our customers. And what I mean by that is we got a phone call on, I think it was Good Friday, from a customer who said, we have a problem. Can you help us? And within days, literally over the weekend, the team innovated specific formulations, shot those formulations to the customer. We were qualified within a week, and then did field trials within another 4-week period of time after. We solved our customer's most difficult problem, and we were rewarded on the back end with a net new piece of business as a result. We want to rinse and repeat that over and over and over again.
Very good. And then, I mean, when you're looking at the competitive landscape, I mean, who are you most often going up against?
Yeah, it's a whole array of different companies. We're incredibly small, but in some instances we're going up against the big guys. Companies like the Ingevities of the world, just as an example. Companies like Steffen, multi-billion-dollar companies. But we're able to go toe-to-toe because we've optimized our cost basis. We have built in incredible agility, and we've got an incredible team that we put in place over the past year.
For sure. So, I mean, you mentioned briefly that, you and Ryan were, this is your, I don't want to assume it's your second go around, but it's your next go around together and coming into a company and hoping to create value. So, I mean, tell us a little bit about your previous experience in working together at a specialty chemicals company, and what were some of the lessons you learned from that first experience, and maybe some of the opportunity that you saw with Ascent. You're like, all right, let's get in there. These are some of the things we learned. We've seen something similar here, and we can create value.
Yeah, you bet. I mean, to be clear, Ryan and I have been working together for a period of right around 10 years, off and on at a variety of different companies. The last company that we worked for was a company called Clearon, based out of Charleston, South Carolina. It was struggling at the time, losing truckloads of money on an annualized basis, on the verge of BR. And in a reasonably short period of time, I believe it was 4 years, we managed to turn that around. And one of the main lessons that we learned through that process is it's all about people. And you hear folks say that all of the time, but it became incredibly clear to us through that journey. So, the ability to identify, to attract, to recruit, to develop and retain top talent, that is a true competitive advantage. And we carried that with us to Ascent. Right out of the gate, we made some changes. We invested purposefully in SG&A. And, when you look at our results from 2024, it's just a function of the quality of people that we have brought in and empowered to do incredible things.
It's interesting when you mentioned that Ascent is, a very small company, and, you go through your most recent earnings. I mean, for 2024, correct me if I'm wrong, you guys did, what is it for the full year? About, was that 178 million, right? For 2024. I mean, small company, 178 million for 2024. I'm curious, what's the TAM, right? What does a big company look like in that you're trying to aspire to, or, for folks that aren't as familiar with specialty chemical space and as well as the stainless steel?
Yeah, I'll give you some different context. So today, our business in specialty chemicals is kind of broken out into two buckets. One is custom manufacturing. That's when customers come to us and say, hey, can you make this for us? We don't want to invest in CapEx, or we're in the process of optimizing our assets. Whatever the case may be, they need manufacturing help, and we step in to help fill that void. The other part of our business, the growing part of our business, is in the branded products that we manufacture and sell. We've seen some pretty interesting success in 2024 through the marketing and sales of those branded products. For the branded products that we produce today, the TAM in the U.S. is nominally $9.2 billion. And you can see our top line, and that top line is representative of all of our sales, not just our branded product sales. So there is an enormous amount of market share out there and available for us to get after. And that's exciting.
Absolutely. So, let's dig into the financials. I mean, you guys just announced, we're recording this on Wednesday, March 5th. You guys came out with the, Q4 and full year yesterday, March 4, 2025. So, I mean, give us a little overview of, how and why the company performed year over year and quarter over quarter the way that it did. And just for folks that haven't seen it yet, it's, reducing costs, it looks like, reducing net loss quite a bit, going up on gross profit is improving. So love to hear from your guys' perspective, what is some of the reasons for why the performance ended up the way it did, and if what you're hoping to see, moving forward from what you can tell us.
Sure. I'll jump in and you can add some additional color. 2024 for us was really a year on kind of stabilization. We joined the company. I joined late 2023, focusing exclusively on chemicals. A couple months later was moved into the CEO role, and then shortly thereafter, minutes thereafter, Bryan came in as our CFO. But for us, job number one, number two, number three was stabilization of the company in both segments. So right out of the gate, we came out swinging, aggressively focused in on cost. Surprise, surprise. We identified and brought in new talent to get after strategic sourcing. So we did a much better job on commanding better pricing for our key raw materials. But we didn't stop there. We also dialed in on labor and overhead. And I think, year on year across the enterprise, we optimized labor and overhead by about 20%, if I'm not mistaken. I think maybe 19. But significant improvements from a cost standpoint. And it's not a 1 month thing, and it's not a 1 quarter thing. We've been able to sustain those gains throughout the balance of the year and rolling into 2025. So very, very pleased with the progress that we've done in stabilizing and improving our costs. But also, we did a fair amount from a product line management perspective. In some instances, we were manufacturing and selling products at a loss. Well, that's just bad business. So when and where we could go out and extract the appropriate price, we did that. And if we couldn't, we walked away from that piece of business. And that's in part why you saw some of that top line compression year over year. Obviously, the markets didn't do us any favors. Last year, everything was incredibly soft. As we roll into 2025, we're not planning on the market doing it for us. 2025 is going to be yet another year of incredible self-help, but we're pivoting to growth.
Yeah. Very cool. Ryan, you want to add anything to that, or should I move to the next question?
Yeah, I mean, I think when I think of 2024 and what we walked into, I mean, the two segments you see, you're not missing anything there, right? There is no fundamental or foundational reason to have a steel business that sits next to a chemical business, right? The business was confusing. Bryan and I obviously have a history in specialty chemicals, so that's what we knew best. So we had to kind of take a step back on both pieces of these business. And I think when you look at like the specialty chemical side, what we learned at Clearon was, strategic sourcing can unlock a tremendous amount of value. When you have a really good team there and a really strategic, right? The strategic part of sourcing is important, right? We can have buyers and purchasing managers who can buy the raw materials, but it's not enough, right? You can't drive real value. And then when you couple that with a really strong planning and scheduling team and really tight business operations and business analytics, that's when you can start to drive real value. So we knew we had to bring those resources in. We knew we had to refresh talent in those places, but it became clear we just didn't fundamentally understand our business. We didn't understand our capabilities. We didn't understand our customers. We didn't understand our end markets. It's hard to improve a business when you don't really understand what's driving it every year, what's driving your growth, what's driving your impression? Why are customers coming to you? Why are they leaving? You just don't know, right? And when you're operationally inefficient, your sales reps tend to have to do way more than sell, right? Selling becomes the last thing they do. They're doing effectively, glorified customer care roles. They're chasing trucks. They're working with the plants to make sure planning's, not just looking at what you did last year, right? What's coming, and it's often real time, and it never works, right? Your inventory goes crazy. Your cash gets burned. So we had to take a step back. We brought a lot of new people in. We understood the business. We brought in a little help from the outside to kind of look at our capabilities and say, what do we have here at each plant, right? How do these three plants become one cohesive chemical company rather than three standalone entities that operate inefficiently and on their own? So, centralizing a lot of what we do, bringing in people that can kind of see the business the way we see it was a huge focus. And that started to allow us to have better conversations with our customers. We were able to go out and talk price more intelligently. We understood our value proposition in the case of having some larger customers. So a lot of that helped, right? And then you have the strategic sourcing working in the background to kind of drive down your cost basis. And we got to the point of doing things as simplistic as checkbooks, right? Handing an Excel document to every plant leader. I want you guys to write down everything you spend money on. And it was as much about an exercise of, getting to have the visibility, but a lot of cases they didn't know, right? It just wasn't a piece of visibility they had. We had no FP&A, right? So the financials went up, they never went down. So no one owned anything because the budgeting was done at the high corporate level. No one owned a number. It was easy to point up and say, I don't own that number. So it was all in an effort to make budgeting for 2025 more efficient and more impactful. So we had to really step way back, I think, in 2024. Like Bryan said, stabilize the business, get everyone to understand exactly what we're doing, preach that it's not all about volume, right? It's about margin and how do we drive profitability, mindset changes, new talent, like Bryan said, was huge. So, to me, those were the drivers that started to hit the P&L. Did they all come through now, right? And then you see like the top line compressed a little bit. We're okay with that, right? I want to see more profitability. I want to see better business flowing through our plants. So that was a lot of 2024. Get the people in, allow Bryan and I to elevate. We knew at some point inorganic growth was going to have to be a part of the strategy. The quicker we get to looking at that, the better. So we have a good team in place. We're ready to grow now, and I think the results were what we expected. I think the market did do us any favors. I would like to see a little bit more on the chemical side in 24, but I think the table's been set for 25. We've kind of refreshed everything, and we're ready now to grow.
Absolutely. So, this is the fun time, huh? The turnaround fun time. I'm sure you guys have been having a blast, actually, sinking your teeth and long hours. And, I think I see a pillow in the back over there in the conference room, actually.
Yeah, right.
Oh, yeah, there it is. Yeah.
Try to keep the sleeping bag out of it.
Oh, I figured as much. Okay, cool. Well, my next question on here, and this is one that I ask every company that comes on due diligence series here. You guys are starting to make the rounds. Obviously, you do, hired IR firm, you're getting out there, you're doing some more one-on-ones and meeting with investors. After hearing the story and getting a better understanding of Ascent, what are some of the frequently asked questions that you guys still get that maybe folks are like, all right, I get it, but there's this that I don't understand, or I still don't understand this. Maybe we can address them here.
Yeah, a lot of, I think what we've run into was just confusion about the business, right? Like the steel side and the chemical side. Our current shareholder base has been with us a couple of years. They kind of understand the story, but when we go out and talk to new people, it's confusing, right? We have to kind of bridge a gap that can't be bridged, right? There is no rational reason for it. So for us, it's trying to help people understand what the path forward looks like. As we understand the business a little bit better, we try to give some expectations of where we think we could take this, but it evolves as we get into the markets deeper, we understand our capabilities a little bit better. So I think initially what it's been a lot of is just help me understand the business, right? What's volatile, what happened over the last few years, a little history on Bryan and I, because we've been together a while. And I think that's a lot of what we start to answer. It's just help me understand Ascent and what you guys do. And we kind of help them see it today and help them see the evolution of where we think this can go as a pure play specialty chemical company with a really strong balance sheet that's ready to grow now after a little bit of self-help.
Got it. And then, Bryan, you want to add anything to that, or?
No, I think you nailed I mean, that has been number one, number two, and number three. And, you know, it ultimately gets back to, you know, giving our investors an enormous amount of confidence. And that takes time. You have to earn that. So thankfully, as Ryan said, we've laid that foundation. We've earned back their trust, and we intend to reciprocate.
Very cool. So another question I have for you guys, you know, as you're laying out this vision for, you know, let's say folks that are current shareholders, but also maybe new to the story, you know, just plain devil's advocate here, you know, in your opinion, other than, let's say, execution risk, which is standard for everybody, right? What would you say are some of the company's downside risks if you had to pinpoint something?
Yeah.
I mean, I think this is a risk probably most companies face. It's focus, right? How do we focus when you walk into a situation like we did where a company's, it's not underperforming per se, but it's at the whim of the market, right? It's not driving itself. It's really being driven by outside factors. So for us, it's how do we focus enough and not try to solve every problem, not try to chase every market. We have really broad capabilities. We can participate in a ton of markets. That sounds great, but it also means you're the master of nothing, right? So for us, it's focusing the team, focusing our new people who come in and see problems, and it's trying to help them just, you know, methodically solve problems rather than continue to grow your list of to-do. So for me, one of the downside risks we have is, can we focus, right? Can we point this thing in the right direction? Can we do that without trying to solve all of our problems and just becoming stagnant and showing no signs of growth and really burning everyone out? Because the effort level's there, but if you're not focused, you're just not going to do anything. You're running backwards on a treadmill. So to me, focus has been a huge part.
Yeah, and I would say, you know, retention, right? For the very reasons that Ryan just referenced, right? Part of our success is because of, actually all of our success has been because of our people, and anyone that's worked in a turnaround environment or a transformation environment, whatever you want to call it, you know the level of grit and the hustle that it takes to do that. We've got incredible people, and we need to stay focused on keeping them engaged, keeping them motivated, because we still have a lot of work to do.
Very good. So another question I have to ask on here, you know, that even though the company has you know, really reduced the losses, you know, just curious from your perspective, what would you say is the company's path to profitability while also maintaining that growth mindset?
Yeah, I mean, look, again, from a cost standpoint, I think we did ourselves a lot of favors in 2024. So it's all about sustaining those gains. Growth, we've pivoted to growth twofold. One is organic growth, and our reality is we have an enormous amount of capacity that's not utilized today. So we can unleash that without a lot of additional incremental costs. And that's what the team is actually out working on right now. Is going on, looking out for new pieces of business that are margin accretive. And then number two is, you know, inorganic growth. So we've stabilized, great. We need to drive organic growth, but also pursue actively inorganic growth through selective M&A. And our commitment to our shareholders is we're going to be very, very purposeful and deliberate about what we do and do not do. We looked at a property last year. We were actually pretty close to the finish line. We found some things in diligence that we didn't like. We retraded or attempted to retrade, and the parties couldn't come to a reasonable solution, so we walked. And that's okay, because we're going to do the right things by our shareholders.
Very good. All right. Well, look, I got one more question for you guys. You've answered everything I've had, but my final one for you both here, you know, from what you can tell us and in your opinion, where do you want to see this company in 3 to 5 years, and what do you think will be some of the inflection points that will get you there?
Yeah, so we could piggyback on this. You know, there are a couple of inflection points. So obviously we're looking at our portfolio and working on ways to optimize that portfolio. Again, we were brought in to build a specialty chemicals business that is largely oriented around the folks that we brought in. That is our mandate. So we're going to look for, you know, strategic exits for the stainless steel tubular business. Not a fire sale. It'll be very, very purposeful, but our mandate is to grow the specialty chemicals business. Beyond that, inorganic growth, we've got about 50% of capacity available to us. We're going out more aggressively driving that growth. Over the next 2 to 3 years, we should see our specialty chemicals business punch north of $100 million with a very, very good margin profile.
Yeah, I mean, just to piggyback off what Bryan said, the goal is to, find the maximum value for the pieces of this kind of puzzle that just don't fit. Right? There's better homes for these businesses, and ultimately we see this as a 15 to 20% business. We don't have a top line target. We don't have a bottom line target. We know where margin should be in this business, and we believe, right, our time, our efforts, our capital is better directed towards specialty chemicals. So we can drive some of that through divestitures and strategic exits. That's phenomenal. We can reinvest those proceeds and then the ongoing cash back into this specialty chemicals business to continue to grow. I think that's ultimately what we see. Inflection points we've already been through one. I think 2024 was a big one for us, right? Clean up the company, stabilize it, bring on new people. 2025 will be largely about how do we streamline the portfolio, make the business just easier to understand. Hopefully do some inorganic growth this year. I'd love to see us bolt something on that kind of helps us kind of accelerate the growth path, and then from there it's just continue to build on, trade up the business we have from the lower margin higher volume stuff to higher margin lower volume business, and just continue to trade up the business and make it more profitable and just keep plowing those returns either back into our shareholder base or back into the company. That's ultimately the game for us.
Very good. All right. Well, you guys, you hit every question that I had. With that, where can our audience go and find more information about Ascent?
www.ascentco.com.
Very cool. All right. Well, Bryan and Bryan, thank you so much for joining me here today. Really do appreciate it. Good luck. Stay safe, and I'll see you in Vegas.
All right. Sounds great. Really appreciate it.
Thank you.
Appreciate it.
This podcast is for informational purposes only and is not provided as financial, legal, or any other advice. The information is not investment advice or an offer to buy or sell any securities or make any investment. The views expressed by guest speakers are their own, and any reference to third-party products, services, or information does not constitute an endorsement thereof by SNN or its affiliates. SNN expressly disclaims all liability for any individual's use of the information presented in this podcast.